Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. Joining us from Austria is Michael Bishop. Austria, I got it right this time, right?
I'm sorry
No,
to
no,
say,
no, you're in Switzerland. What am I doing?
sorry to say, I'm occasionally in Austria, definitely, but I'm
No,
living, working in
want to
Switzerland.
welcome Michael Bishop from Zurich, Switzerland. Did I get it right that time?
Absolutely.
Okay. See, I just
No Geneva.
and good morning, David. Nice to see you. I want to give just a big thank you to Eric Gallup. Did I say that pretty close to the right? David, Eric, you'll have to let me know. He put together a wonderful study that we made. Galam, got it. He put together just a absolutely fabulous little study that we've shared now with the premium members of the Active Trend Traders on setting up some alerts and all that kind of stuff using TSI with the Thinkorswim platform. Awesome job. We'll be sharing that again at the 12 o'clock hour when we go into the final hour. And so let's get going. Lucerne. Where's Lucerne? Michael, where's Lucerne?
Very, very close to Zurich.
Ah, okay. Now,
It's basically the Alps resort of Zurich.
ah, okay. And you said
Davos
it's.
is also very close, and
You said
there
it's.
all the World Economic guys are there.
Ah, okay. And you said it's cold and snowy back there right now.
Yeah.
Wow.
December was no snow at all. Now we have really winter.
Well, I've got a good buddy who lives up in Idaho City, Idaho, and
Yeah.
out in the mountains, and they have got so much snow up there. He shot some pictures out, and he's much more of a mountain man than I am because he was having to dig out and get the snow plow out and all to do that kind of stuff to get our snow blower out. The just absolutely amazing. He sends them the pictures. I mean, he's got like 15, 20 feet of snow around his cabin, and again, he looks kind of like, for those of you know who he is, it's Grizzly Adams. But anyway, John's up there in the mountains. Great guy. I went to high school with him a couple of years ago. So I want to welcome everybody to the How to Make Money Trading Stocks webinar for today. I hope that you have had the opportunity, if you are anywhere in the world, to take a look at the peaceful transfer of power within the United States. Pay attention to the inauguration. The little bit that I paid attention, that I saw this morning, was just absolutely phenomenal. It seems like the people, at least speaking between the transfer from President Obama to President Trump, President Obama was much more gracious than some of the people who follow him, and how they just accommodated. So it was just, it really was cool to watch it and just participate at least from my television set in it. So I've got a couple of friends that are back there going to all the parties and all that kind of stuff. So I want to remind everybody that all the materials presented are for training purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. And here's Michael's disclaimer for his work in Europe. And Michael, you are still with Long-Term Dash Investors?
Yeah, that's
Okay.
fine. That's fine.
Awesome. And I do look forward to.
Frank just told me the regulation got more and more absurd.
Ah, okay. But yeah, I do look forward to chatting with you maybe sometime next week about that other stuff with some of the strategy we do.
Definitely. I also write you an email afterwards. So
okay.
Kind of,
and so
yeah,
here's a little bit about who I am and what we've been doing. I've been trading for a living since 2006. I have a research colleague down in Dallas, Texas, Mike Traeger, who's not with us today. But Michael is recovering from a little bit of a cold, and so he's a little bit raspy today, but we know we will value his words even more. I want to remind everybody that, at Active Trend Trading, I am very much about providing, primarily the major thing I want to provide is good, solid, affordable training to people who want to learn how to trade the market, who are still working. And we try to get it clear, simple, so that then you can multiply what's going on. We're going to be talking this coming Wednesday night about refining seasonality for the leveraged ETFs, which are now make up a significant portion of our primary watch list. And so we'll be talking about that. And this last week, if you are a premium member and have not seen the training from last week, please take a look at it. It will provide a degree of patience that you may have been looking for in doing your trades. It's a really good, strong entry signal for early entries. So we do that every week. And so let's take a look at what we're thinking about the market. Okay, we've had the inauguration. Now what? I'm kind of in between two places on this. Is basically the markets themselves have kind of been channeling here over the last few weeks. The S&P particularly is working within a trading range. The Nasdaq has actually gone up to make some new highs, but I'm seeing going into this coming week is we may be posturing for a retraction, or are we coiling up to push even higher? What's really I find very interesting, Michael, is that the favorability of the new president is really low. Now we won't talk about how the news agencies who did those polls. So the favorability is low, or around 40 to 42%. However, the optimism in the United States is over 60%. The optimism about the future. Now, I think part of what we have seen over the since the election and the dramatic move in the market is primarily due to that optimism, forward-looking aspect of fewer regulations, healthier economic environment for businesses to grow, and that people just have this sense of, hey, things are turning around, things are going to get better. So and I don't know how that's being portrayed in Europe, but I'm sure the folks who invest in Europe have been really excited about what the U.S. market has been doing, isn't it?
Yeah, definitely. And the first, so after the election, everybody looked to the U.S. And in the last weeks here in Europe, it was some positive surprises in the terms in the sense of getting less bad than expected. For instance, Spain seems to get out of a really long recession or period where everything gets just worse every year.
Mm-hmm.
And France the same. Yeah. And also with Brexit, but for me that's really absolutely no surprise that there was no immediate impact, and now it's politician talk, and really the talking heads you hear now every couple of weeks, but it's not really something very concrete going on.
Okay. Well, I know the lady who's leading Britain right now. She's trying to she's trying to put together the pieces for the actual Brexit to take place, and it sounds like she's being very pragmatic about it. but I also understand that in several other countries in Europe, there's also this populist type feeling coming around, even like in France, where
Yeah.
they are thinking very much about, about the national, the not nationality, but the nationalism and the populism that is kind of running rampant here in the United States right now. Very um,
Well, in France, they have a kind of also a complicated election system, but it it looks like it will not be compared to America the typical vote Democrats versus a Democrat candidate versus a Republican candidate,
yeah.
but it will be a Republican candidate versus a populist right side politician.
Yeah, I mean, because I think
And that changes the odds. So if if people have the so in nowadays in France, I think if the people have the choice between a populist and a Democrat, they would rather go for a populist.
okay, and I think
If it's now for this grand old French Conservative Party, and the candidate is also more to the right and more to the economical friendly side.
okay,
So
interesting.
that so my feeling is that it will not be a populist vote in France,
Okay, well,
but it's some time.
uh,
And and the other around Christmas. Uh, no, it was not a surprise that Merkel will candidate once again. I think it's now then her fourth term or in fifth term. I don't know
yeah.
for the autumn election.
Okay, interesting. Well, David just mentioned, okay, Theresa May is the lady in Britain, and
Yeah,
it's Marine Le Pen in
yeah, Le
France.
Pen in France. Yeah,
She's a populist?
yeah.
Well, you got to love somebody whose first name is Marine. I mean, because who doesn't support the Marines? I mean, come on now. Anyway, um, I
Well, the French, they don't understand English,
okay.
so
Anyway, so that's what I'm looking at for the S&P, posturing for retraction or recoiling for an upside. One of those things I'm looking ditto for the NASDAQ. When we look at get a chance to look at the Russell 2000, we'll see that it is already, the 8 is dropped below the 20, and so is it giving us the first clue that, yeah, more significant correction is coming. Now, we have to keep in mind that, hey, we are in an uptrend, and so we need to treat it like that, but we've got a couple of charts. We're going to look at the same chart we looked at last week, the post-election, post-inauguration chart, with the question being is, will historical norms prevail? Now, in this whole election cycle within the United States at least, clearly our historical norms did not prevail. A person who is just not a traditional politician just tapped into something that people reacted to and supported, turned out supported. And so I find it very interesting. But we'll see where that goes moving forward. But it's interesting to hear what's going on in Europe. Here's our percentage of stocks above the 20-day moving average for today as of about 9 o'clock this morning. The spiders, which the bar chart reflects, is still flirting up here towards its highs. Has not really rolled over in any way other than it, you could, or not you could, it has. As you notice, we have put in, here's the high, here's a lower high, here's a lower low compared to these prayer swing lows here. And so it put in a lower high, and then it's kind of just churning right here, trying to make up a decision which way to go. While that's been happening, Mike talked about this on Wednesday night, is while that has been happening in the S&P, what's been happening in the NYSE is that the stocks that were participating for this big push up have started to dwindle off, with less than 50% of the stocks on the NYSE being above their 20-day moving average. And so if you want to do some additional study this weekend, you can go to barchart.com and also check how many stocks are above their 50-day moving average, how many stocks, and they follow a similar pattern, but as and typically, because it is a non-weighted, the NYSE is a non-weighted index, a lot of times it can be a forewarning of where the markets may go in the future. And when you start seeing weakness start to show up there, again, doesn't mean we're going to go into a huge big correction, because as we've seen in the past, the S&P, the NASDAQ, and even the Dow can be held up by just a few entities and kept up. But right now we are getting some definite divergences between where the S&P is as compared to what's going on with the turnover in the other indexes. It provides some additional underlying information to help us prepare at least our ideas about what and where the market may be going. All the entities, well, actually the Russell, I forgot to turn that to red. The Russell, as of 9 o'clock this morning, was actually down for the year a little bit, 0.2%. Everything else is up from the highs of last year. As you can see, the NASDAQ and NASDAQ composites up, Russell down, and the Dow and the S&P is down also. Let's take a look at the indexes. So the S&P, let's take a real quick look at what's going on with the S&P. As you can see, we've got a strong level of resistance up here at the 2280 level on a daily chart, strong level of support down here at the swing low that we were talking about, the swing low at the 2233 level. This is where there's a slight difference between the spider, the SPY, and the SPX, because the spider showed it made its high for the year back here, and that this was a lower low. And in fact, this is a higher on the S&P. And I don't know if those of you who the premium members got to take a look at what I put together on the index ETFs that talked about both the index ETFs and the regular leverage ETFs about this particular characteristics of the ETFs. While they come close, they don't 100% emulate the actual price action of the actual index itself, because the ETFs are made up of some sort of derivative of what's going on here. So let's take a real hard look here. Basically we've got a zone within a zone. We also have a level of support here at the 2260 level. We're getting kind of a typical traditional. We had a big run up. This was 10% from here to here, and now we're attacking the moving averages, the 20, the 8, and the 20, hammering them over so that they will go flat, eventually perhaps break down to the downside. What's the projected move down here? Well, of course, you got the 2233 level, and then we'll just have to go at it from there. Now, traditionally, the market can start weakening towards the end of January, and so what we may be seeing here is a weakening going on, but it has not broke to the downside. I think Mike Trigger just joined us. Hey, Mike.
Sleep and never.
Hey, Mike, you're off mute now. And so, anyway, welcome.
Can you hear me?
Yeah, we got Michael Bishop online also, and you came in at an opportune time because we're just talking about what we're seeing going on with the S&P. And then the other area that we'll just take a look at is we have had the TSI after putting in negative divergence on the momentum. They're right there around that support that it picks up about the 0 line. And so, as I said earlier, the S&P is doing one of two things. It is basically consolidating or coiling to perhaps move up, and or just posturing to move back into, some sort of a correction. Now, if it corrected from where it's currently at down to this level here, that's only a 1.46 correction. If it fell down to the 2214 area, that's a 2.26. In the bigger scheme of things, that's not a lot. Same thing here. On a weekly basis, we now have, if we close right where we're at, we will have now had a hanging man, which also turned out to be a bearish Arami, and then a bearish Arami this week based on that candle there. So it also looks as if we get a nice, kind of a slow rollover in the True Strength Index, and the momentum has dropped a little bit today. So as we look, that's what I'm seeing on the S&P. Michael or Mike, you seen anything here on the S&P that interests you?
Well, we know that the hanging man we see on the weekly chart is not a very strong bearish candlestick.
That's correct.
Statistically, from Bułkowski's studies.
Correct.
They don't always follow through. I think that that kind of shooting star candlestick on the weekly a few weeks ago is maybe more of a tell. And yeah, right there. And the upper wick that we're producing this week, and multiple upper wicks that we see on the daily chart over the past few weeks.
Yeah, and Mike brings up a very important point there. That shooting star that I highlighted with the V there is that that as a bearish indication, bearish, with the bearish thoughts behind it, is still in play and still in place, because this big green candle here may have taken out the top of it a little bit, but it still closed back down within it. So, Michael, you seeing anything with the S&P that, are you getting long the S&P right now?
No, I'm short, and if there is a correction, I would re-evaluate this. So
okay.
Basically, then I would take some winners.
Okay. So, Michael, Mike Traeger, you staying dry in Dallas, or is it raining there?
Oh, we're having real nice weather today. It's almost spring-like. I mean, even the birds were singing this morning. So, the weather patterns here continue to be very erratic. We had a bad week this week up until today, and today's beautiful, almost California type weather.
Hey, it's a beautiful day, and so Nasdaq's looking kind of interesting too. It came up, made its new high. Actually, we had drawn these extensions in here previously based off the run from here to there. I'll throw those up just real quick. This fib retracement aspect. There we go. Lay that in. And this upper dotted line was the 618 extension, and it had basically got up, stopped at the 1236, and then did some consolidation and popped on up to this. But and those of you, if this is the first time you've joined us, the 1236 and the 1618 extensions off of a move like this are the levels, especially when you're breaking into new high territory, where there is no overhead resistance, but those are the natural type of extensions one expects on a price move. And so, as you can see, we pierced that today. We met it yesterday, pierced it today, then it failed, and it's starting to fall back down. Some of the things that are going 1, 2, 3, 6. Let's see some of the other things that are going on with this. It hasn't. It's just been a small turnover, and it hasn't really quite crossed yet. The weeklies is still looking up. We're getting a little bit of pullback on the weekly today, and we may have a, let me get rid of that real quick. What we may have on the weekly chart is, we've already talked about, we talked in the last couple of weeks about how this was extending away from moving averages. Well, if we close close to where we are right now, we would have a shooting star, bearish Harami, at a level of now resistance, and so this new high up here that we made earlier today may become the new swing high, and we'll see what happens next week. If we break down below that 50.22 level or 50.24 level, that would be an indication that we may be, going to pull back at least into the 20 as we did earlier in the year, and then we'll have to look for the new turnaround from there. Mike or Michael, anything here?
Well, except for, as you've already mentioned, the distance between the price action and the moving averages on the weekly chart,
Yeah.
I really can't, see much of anything else to note.
Okay, would you consider that we have some negative divergence, though?
Yes.
Okay.
Yes, I mean, it remains to be seen if that divergence is making a prediction and if it's going to follow through, but absolutely it's there.
Okay.
Yeah, plus, big companies will report. I mean, Apple and Google and Facebook are all, I think, in the next 2 weeks. So that could influence.
That could rattle some.
Yeah.
That could rattle some cages, because I know we had Netflix report. Did Netflix report?
Yeah. Yeah, they did.
They blew the doors off it, from what I understand, and it gapped up really nicely. But then that's one thing I've been noticing. Just it's the same thing that always goes around with the earnings. If you get a good surprise like Netflix, it was well rewarded, and then I think it's GIMO. I want to say that's the ticker. Didn't do too well on its earnings and got whacked, and so those forces are still in place. So, but I'm looking at this.
Well, so far the earnings have been very silent.
I'm sorry.
I think Netflix was the only big move.
Yeah. And so anyway, so yeah, on a if we close down just a little bit further, we'll actually have a bearish engulfing on a daily basis of yesterday's candlestick, and we'll just have to watch and see where this goes from here. The one that is really of interest to me is the Russell. Okay, and here's what I was talking about earlier today. We have had a basically 820 cross right there, and this started getting set up about 2 weeks ago when we had this dark cloud cover, and then the Russell is just basically kind of shown it recovered a little bit, trying to push higher, but now has moved back over, and now appears as if we are going down to hit against the 50 and perhaps start bending the 50 over. As you can see, even on the weekly chart, we have broken down, below the we have made a new swing low, at least, or made a new low, and so we'll see what transpires from there. I would pay attention to the Russell or IWM or TNA or TZA. If it comes back up and hits against the 8 and then rolls back over, that would be perhaps a good trigger for getting into TZA or doing a put on the IWM and that kind of stuff. As you can see here, this entity has gone into, it tried to rebound, but these were very negative divergences here, same thing over here. But now on at least the daily charts, we're getting in, down into the below zero line. It can drop further. It has not near where it typically reverses around the negative 50 level, but what we're seeing on the daily charts on the momentum indicator is not, the weekly charts at least look a little bit healthier, but they are turning over. We this week now have got separation between the slow and fast TSI lines, and so we have had a crossover. What I do like is that it is holding this level of support there at the right about there, the 1341 level. And so we'll see what goes on with that. Did you exit TZA as planned yesterday? I exited at 2030. Great, David. That means that you were more profitable than I was on that one. No, I got whacked out by a penny on the stinking stop loss on it. But I mean, I made a little bit on it. But if you got at 230, good job. So Mike or Michael on the Russell?
A lot of resistance up there around that 1380, 1390 level.
Yeah.
And don't know how that's going to hold going forward. But if it does hold, it could be a pretty important intermediate to longer term top.
Yeah. Now, one of the things you can do here, and I just drew this in, and this is just is I've drawn in this short-term trend line, which is down, and so watch for any bounces that maybe break up a little bit past the 8 and 20 combo right here, and if it gets up into the level of that line, that's where that may be a secondary potential trigger, especially if it rolls over from that. But if it breaks above it hard, then that puts us back into the 1380 to 1388 level for the potential area where we might want to look at turning around. So, Michael, you got anything on this one?
No, I have a question. What do you? I agree that the upper bound is pretty solid.
Yes.
But what about the line you draw at 3058? Is that the Fibonacci one or?
Oh, the 1353 right here?
58. Yeah.
Yeah, this one right here. Yeah. That is based on this initial support here that I picked up over here. I don't know. Let me just throw a fib on there real quick.
Well, what you don't see it in the chart, but volume is really low.
Yeah.
And I mean, as soon as there are no new buyers, but the former buyers want to sell, it could be quite awful.
Yeah, and that's what we'll be looking for, is some acceleration to the downside on this. But now, yeah, that level of support that is now below, it was picked up of this initial swing low here. It came up, made a swing, the lower swing high, came back, the swing low held, went back up, retested here, and so it's kind of just a classic, range-bound, horizontal trading range type of pattern, where it's now broken out the downside from that. And there's a couple of things we can do with that. We can either, one, give us some kind of a, because oftentimes price action will move all the way back down to, and let me get that from there, activate, move it down, and so we move that down to there. That would put us back down, back at a zone of support around the 1319, 1320 level. And so let's remove that drawing.
You know what we haven't looked at for a while that might be interesting to look at, since we're going over all of the indexes?
Which one?
Is NYA.
Here's what NYA. It's showing symptoms of wanting to drop. I mean, the 8-day is now turned over, but we haven't had any type of a cross. It's holding the 20, and it came down, made a new low, didn't make a new high as it pushed back up to it. It's been dropping kind of sideways here. And again, we're getting kind of a cross message. We're getting the cross message on the dailies as compared to the weeklies. The weeklies look like they want to, roll over. And this is also one of those things, go back over the weekend and kind of see what happens when you start getting crosses. How is NYA or Russell perform when you start getting these things? But again, to me, it looks like the stronger weakness would be on the weekly chart, Mike. And you can pipe right in there anytime you want. And what I would also do is, excuse me, definitely draw. You can definitely draw in that trend line there, and see how it reacts around that. Or if you're looking at it. So what do you think? It has been drawn. What do you think?
Well, it's a valid, on the daily chart, certainly a valid short-term trend line.
Yeah.
And I don't know that we're getting any more information from this than we have from the other charts. Potential double top formation on the daily chart.
Yep.
A lot of resistance up there where we're seeing similar resistance on other charts, and just something else to look at that is not a cap or a price weighted index.
Exactly. And so very interesting. But yeah, I always kind of like watch this when I get, when it looks like the dailies are getting down into where you could expect a little bit of a bounce up off the bottom, but the longer term is looking like its momentum wants to totally roll over, and that's what I'm seeing right now. It hasn't happened yet. We're still in a kind of a trade zone here, but
well, and we're still again getting back to price action as it relates to the 8-period moving average on the weekly chart. I mean, still above it. And for those who are trading that methodology on weekly charts, there would be no reason to take any action on this at this point in time.
Exactly. So, okay, let me get rid of the... So, anything else on the indexes, gentlemen? Okay, here's a chart that I introduced last week, and I think since today just happens to line up perfectly with the inauguration day, this is a chart that captures, oh boy, let's see, it captures 65 years worth of data, and this was the inauguration date, inauguration chart that followed what took place when there was a change of party, and so this provided a track on this is trading days, and what it has shown in the past is that typically there may be a little bit of a surge for about 10 trading days, but then after that, which that would take us into the first week in February, then there's typically a rollover and then a sideways move going out for 120 days. The 0 day here is since election, so that would be since the 8th of November. And so that's something, I'm not going to necessarily base my trades on this, but does this chart support what we're seeing in the long-term charts?
Well, it certainly supports what we've seen since the election in November.
Yeah,
I think, and almost to a T. Remains to be seen how things will go in the next few weeks. But And also, knowing what happens with seasonality trends
Yeah.
In the January, February, March time frame, and then, this year is an inauguration year, they do seem to sort of tie together, don't they?
Yeah, they do. I mean, it's kind of interesting. And those of you who saw the, matter of fact, I think I put this out in a couple of the presentations I did last week. The bonus presentation that I did about the leverage ETFs last week, I had a seasonality chart that also showed the a yearly time frame of average data across the years, and they showed that, remember the chart on Wednesday night, Mike, it showed a more of a significant pullback after the inauguration that made February and March into the first part of April extremely slow months for the indexes, and especially since we have to keep in mind the Russell had a 20% move from its low in November to its high in December, and now it is digesting those gains, and we may see how people, how the institution will start saying, well, wait a second, let's take a little bit more of this profit off the table, because we're going into a season of the year where the markets are, I won't say seasonally weak, but they are not as powerful as they are later on in the year, like in the latter part of October. Sometimes the May timeframe, you'll get a good kick in the market. But this is something at least to be aware of. I find it extremely intriguing, and so we'll see where that brings us. Michael, I don't know if you've seen this chart or not.
I have. Somebody showed me. Yeah.
Okay. Very interesting. So, okay, gentlemen. Path of least resistance as we sit here today. Short term over the next 4 weeks. Long term over the next year. Who wants to go first?
I'll go first.
Okay.
Short term, few weeks, sideways, maybe with a slight downward bias.
Okay.
And longer term, whether you want to look 1 year, 2 years, 3 years, but longer term, down.
Okay. Michael.
I would agree on this, but for me the big question mark, and I would really say it's 50-50, that we got another last boost way up.
Okay.
So maybe extremely good news from China, whatever is the reason, or maybe also Europe could be a positive surprise.
Okay.
Maybe emerging markets, just a last boost of all global markets, could be.
Okay.
But that is not in contradiction to Mike's forecast that in 2 years we are lower than now.
Okay. So you can see us moving a little bit higher and then reversing down off of that, similar to a more traditional top type of or exhaustion type of thing. And gosh, I mean, I hate to say it, but I kind of agree with both of you. The only other scenario that I'll throw in there as an opinion is that things start getting done in Washington, D.C. so quickly, and things get so good, and the profits start turning around, and people get employed again, and people, the consumers are buying stuff again, and all that kind of stuff, that we go into a late 1990s type of scenario where we push even stronger and higher based on nothing except we want to push higher and stronger, but then the final collapse after that is not very pretty. Anyway.
Yeah. I like it.
Okay.
Nice scenario.
I have, since we're on the line here, I have a question for Michael, which is, kind of tangential to the markets, but could potentially have a big effect on the markets. And the question, Michael, is there any news in Europe that we're not getting here in the U.S. possibly about the coming presidential election in France?
I wouldn't. Also, we just did we spoke on the show or
Yeah.
before that?
Mike hadn't plugged in with us yet.
Yeah. Okay. To make it short, as France, I would not expect too much because they have an election system, and now the opponent of the populist guy is most probably, and really most probably, one of the, I would say, Republicans if you compare it to the US, and then it should be, you're never sure, but it should be almost be an easy one for the Republicans.
Well, one thing we can do, Michael, is we can send the pollsters from the United States over to France and let them do the polling.
That was useful here.
And then just do the opposite.
Yeah.
Sorry about a little humor there, guys.
No, but I would rather see that we get unsurprisingly positive news from Europe.
Okay.
It seems, as I mentioned before, that Spain and France things look better, look brighter than expected. Because it was year after year there were new bad news coming out, and now it's kind of the first months where positive news comes out.
That's interesting. So, okay, guys, I got to move along here. And so here's where we finished up the week so far. We have not closed. This is going to change because we will have a loss in our Tesla trade, so it will change a little bit. Want to remind everybody that, and Michael and I were talking a little bit about this before we got started, is I'm a firm believer that you have to have a firm system in place, and then you add your strategies to that. And with our teaching process with Active Trend Traders, we help traders clarify, simplify, so they can hopefully multiply their account. Here's some of the things that we have been doing this Wednesday night. Seasonality tied to the leverage ETFs is going to be the training trading period on Wednesday evening. We've made this various updates. We had a great timing presentation on Wednesday evening. And then I'm also doing live Facebook market updates. Please join me at, let's see, it's Facebook, Active Trend Traders on Facebook, and Active Trend Trading on Facebook. And then I do a couple of live market updates and trading tips during the week. And then you can also join us on Twitter. I don't do a lot of tweeting, but it is another way that you'll get knowledge, information about when we post things. So we base the Active Trend Trading System on the 5 pillars of active trend trading: what to trade, or when to enter, when to exit, what strategy we're using, what to expect. Here's where we finished off last year. And so we have increased our capital allocated to strategy 3 this year because it did, exceptionally well last year, and so wanted to continue capitalizing on that. And then if you are not a member or not a premium member of the Active Trend Trader, we are offering through the end of January this special. And with that, as I get, again, it was a very special day today, getting to see democracy in action. So just remember, keep the egg growing, trade wisely, profitably. There's where you can get me at Twitter. And now we are going to be moving into the premium members for the next will be the final hour. And so so the polls in France say that Fillon will beat Le Pen. So there you go.
Is that what they're saying now?
Yeah, that's what Eric reports.
Is it even close? Do we know?
That I don't know.
You know, the only reason I ask that question is because Le Pen is kind of, you know, the Donald Trump of France. And if by some remote chance, and, you know, Trump's chance were considered pretty remote. Hello?
No, go ahead, Mike.
Oh, I was just going to say, you know, if Le Pen, you know, were by some chance to win in France, I mean, she has pledged to pull France out of the EU.
Ooh.
And if that were to happen, and I know that there are a lot of ifs there in that statement, you know, and the EU goes down, I mean, you know, the whole global markets are going with it. And you know, that's something that might be 6 months to a year out, and it would depend on Le Pen winning the election. But, you know, nobody gave Trump much of a chance either. So
yeah,
that's why I was asking the question.
But the situation is quite odd, because if the socialists or the Democrats would be in a good shape, then it would be Le Pen versus the socialists, and then it gets close, or because then you have really two different parties. But if Fillon is the candidate against Le Pen, then it's kind of do you want Republicans or a populist? Would you kind of vote for normal conservatives or populist conservatives?
Okay, cool.
And that's maybe a 50-50. But the poor socialist voters, what should they vote for? And then I would say, if I'm not completely wrong, that 70 or 80% say, well, then we go for the normal conservatives.
Okay, so gentlemen,
it's really a particular situation. It's a very unusual situation.
Okay, gentlemen, I have to call this to an end because I have to get to the next webinar. Ladies and gentlemen online, hey, thank you very much. Eric said that it's not even close, that Fillon is leading Le Pen by 66-33. His source is Bloomberg Business Week. And as long as it's not Snopes or Snoops or whatever you call it, I'll go along with that as being a reliable source. So anyway, you know, you get it here first on the on the How to Make Money Trading Stocks webinar every Friday. I mean, for, you know, something that is basically, it costs you your time, but you get kind of a global view of what's going on. I think that's pretty cool, and I want to thank both Michael Bishop from Zurich, Switzerland, and Mike Traeger from Dallas, Texas, and I'm out here in Kapolei, Hawaii. So, gentlemen, thank you very much.
Okay, bye. Thank you.
Okay, bye. I'll talk to you later.
Okay, goodbye, everybody. We'll be talking to some of you in a few minutes. God bless. Have a great rest of your Friday and a wonderful weekend.